Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, so we're going to look at the market here, going to do a little bit different. We're going to look at SPY, the tech sector, the financial sector, and the VIX with a short-term mindset, looking into the coming days, looking into the FOMC potential reactions. And then I'm going to look at the SPY longer-term time frame, because when the market was dumping and everybody was talking collapse, we were looking at the potential outcome of how the market is going to change the trend, if it's going to change the trend. So I'm going to talk about the three possible outcomes that we're going to have for the end of this year and the odds of which is most likely to play out. So SPY on the daily time frame with a huge gap up open today. Very surprising reaction to the midterms. And the reason I say that is because the results were so likely to happen as they did. On a broader scale, Democrats winning the House, Republicans winning the Senate, that was an 80+% chance to happen. So the market was preparing for that over the past couple of days, but it was really the tech sector that went up 3% today. I can't remember the last time I ever saw the entire tech sector up over 3%. I'm sure it hasn't been that long, but nothing comes to mind. And we broke resistance to 81.15. Actually, we didn't break that during regular trading. We broke it during after hours, just barely. So first thing tomorrow, it's a double top, 281.15. If that level breaks, again, a lack of resistance. The bulls are in complete control in the short term, but we're also very, very extended. I would be surprised not to see at least some profit taking heading into the FOMC tomorrow at 2 p.m. Eastern, as some of these bulls look to lock in the very nice couple of days of gains that we've seen. At this point, we're looking for this weekly equilibrium. So the weekly equilibrium in February is a great guide of what to be potentially watching for. I think this one's going to take place a little bit faster. It took 5 weeks to hit our lower high, and I do believe we're going to hit that sometime in the next couple of weeks, whether it's this week or next week. And the midway point has already been hit. That was at about 279 was the midway point of this pullback. We're looking for a weekly lower high to be set. So we're going to talk about the potential for hedging long-term portfolio or positions looking for that weekly lower high. So it's hard to judge where exactly it's going to happen, but just looking at this pattern, we know the most likely scenario is an equilibrium with a lower high being set and then a higher low and a tightening range into the new year that we're going to look for a break for. And when we were doing this equilibrium, and we've been doing videos every day, but we were putting out the videos saying, once this pattern breaks, we're going to look for that to dictate either an all-time high, a move to the all-time high before the end of the year, or the change in trend. So we're going to be looking for the same thing, either a bull break heading to the all-time high or a bear break heading to a monthly downtrend. Obviously, that's a long ways away. We're talking weeks out. So sticking to the short term for now, I almost just went down the long-term rabbit hole. Short term, QQQ, let's actually look at SPY on the hourly. So SPY on the hourly time frame, short term, again, extremely extended. We didn't really consolidate today. It was a straight move to the upside. The RSI is at 80. If we include extended hours, we're consolidating slightly. The last higher low was here at 279. Anything above 279 keeps the bulls in full control of the uptrend. In order to see daily consolidation coming, we have to lose the hourly uptrend. So if we do see initial consolidation first thing tomorrow morning, we can pull back $1, $1.50 and still be maintaining the hourly uptrend. So we're watching the hourly uptrend. When that's lost, we're going to zoom out to the daily chart and just look for a daily higher low to form after healthy consolidation because of the size of the move that we've seen to the upside. If we're going to change, or if we're going to be confident that we're setting our weekly lower high on SPY, we have to lose the daily uptrend. And we're not going to lose the daily uptrend on our initial consolidation. So that's why I say this is going to take a while, because we're going to have to consolidate, form a higher low, then try and bounce. And then if we can't see continuation, then we break to a lower low. That's when we say, all right, our weekly lower high has clearly been established. And at that point, it'll be a bit of a ways away from that top being hit, so there will be less reward for bears, but there will also be less risk by waiting for that to take place. So that's not happening anytime soon. We have to lose the hourly uptrend, then we would have to lose the daily uptrend, and it's going to take days and days to play out. Bulls are still very strong, and it's just a question of what's the reaction to the FOMC going to be, and how extended can we get here. Look at the tech sector, QQQ today. We also have that hourly higher low of 174.05, a little hourly bull flag formed today. And as long as that level holds, the hourly uptrend is intact. Resistance is 175.79. And then after that, we haven't broken that mid-October bounce yet, whereas SPY is right at that level. QQQ is lower. So 178.26 is the level to be watching. Again, huge bull day today. Not a ton of volume, but we know this market can run without bull volume. We've seen it since the presidential election 2 years ago. But we're watching that key resistance, and again, watching it for SPY as well. Hasn't broken just yet. That's going to be tested tomorrow. Weekly time frame for QQQ, equilibrium anticipated as well. We're just looking for that weekly lower high to be set and the tightening range to follow through. XLF has been on absolute fire, blew through the high of the February bounce, or the October bounce, blew through that today and closed really strong. Again, a lack of resistance. The weekly time frame, we're looking for an equilibrium here as well. Already a significant bounce, so watching if the FOMC is going to have a bearish reaction. We'll potentially see a lower high being set in that instance. But even if not, even if we do have a bullish reaction, I don't care if we see another couple days of upside. I'm still looking for that lower high because I know the risk to reward in the short term over the next week or two is going to favor the bears because of the size of the bounce we've already seen, in my opinion. VIX, we're still watching for that. I take that back. We broke that equilibrium. Thought we had held this support of 1706 at this point. So we have the low, high, and then straight down to a lower low. So that's very notable that we have broken this pattern, certainly sooner than I anticipated we would. I thought we were going to stay within this pattern a bit longer, but it looks like we're heading down to the next support level, 1527 and then 1172. Remember how bearish everybody was? Isn't it crazy how that emotion and sentiment can just turn after a week or a week and a half? Where, I mean, I just remember, I don't normally watch CNBC, but I was on a plane watching CNBC, and there was so much fear and so many statistics about how bad this sell-off was, and it's just completely forgotten about. It's almost like it was just, it's very fascinating for me. So weekly time frame for VIX, we're just going to be looking down at recent support levels, and we haven't been heading down in this range in a few weeks. So looking at the support, still looking for a higher low on the weekly. Anything above 1134 is a higher low, but it's a significant pullback from those recent highs, and that's why long-term traders look to go bearish on the volatility index whenever we get these spikes, because more often than not, we end up evening things out. That's just the way markets work. After volatility, we see equilibriums and tightening ranges, and that volatility drops off. So let's talk long-term SPY. We were talking about how, in my opinion, if we are going to change the long-term trend on the monthly time frame for the markets, we were not expecting the break of the February support levels. When we were getting close to them, we were looking for a higher low, and then if this trend is going to change, and I say if because at this point, I would rather go with the trend and stay in the monthly uptrend and stay bullish rather than go bearish if I had to choose. I don't have to choose, which is fortunate. As a trader, I'm going to react when I get more clues. But the bottom line is there's three scenarios in how this is going to play out. Let's look at the weekly for a bit more detail. We are either going to see a V-shaped recovery and a new all-time high. That's the least likely scenario in my opinion. Or we're going to see a bounce, a weekly lower high, and a straight drop to a lower low. That's the second least likely scenario. The high, low, lower high, higher low, tightening equilibrium is by far the most likely scenario in my opinion. And so I'm going to look to do some things. I'm going to look to hedge my parents' portfolio. They are significantly invested in different instruments with their retirement being affected by this market. So if I take a bearish position, let's say it's 10% of their entire portfolio size, and I look to go long on SPXS, or I look to short SPXL, or I look to buy, puts far out. What I chose to do is just buy SPXS today and just begin scaling in. And I know there's time decay on SPXX, but I'm not planning on holding this trade for more than just a couple weeks at most. So I don't think it'll have significant effect. I'm just looking for this lower high to form. So I'm starting to scale in now. And again, the psychology behind this is if we keep going up, I'm losing money on that smaller position and that short, but the portfolio is gaining money. So they offset each other. This is just a strange scenario because it's doing it for my parents' account and not my own. But if you have your own longer term account that you're looking at, whatever sector it is, if it's affected by the overall S&P 500, now is when I would be looking to hedge. So people were talking about looking to hedge, asking questions about hedging down here. And we said, no, you got to wait for that bounce because we know a bounce is going to be coming. Now is when we're looking for the hedge, when everybody's forgot about the scary action, because the most scary thing that this market is going to see is a rollover, a break of the October lows, and a break of the February lows happening within a couple of weeks of each other. And that would be significant fear. And I'm not saying that's what's going to happen. Like I said, if I had to choose, I would choose that we're going to see an equilibrium and bull break, and that's just a coin flip 50-50, but I'm going to take the bull side just because it has the trend in its favor, so that's going to slightly shift those odds over that 50-50 mark. So I'm watching for the weekly lower high. I'm not saying that this market is going to go bearish. I don't need to make that prediction. I'm just going to continue one day at a time, making notes and watching the slight adjustments, and we will see if we get a signal sometime in the next week of trading, which is what I'm looking for the potential of our weekly lower highs being set. So if you are looking to hedge your portfolios, perhaps scaling in slowly, it all depends on your style of how you're going to do it. And it's just the way to be protective. And like I said, if we keep going up, your total portfolio gains will offset your small hedge position losses. So it's going to be very interesting from here, but it just looks such like an equilibrium. So I appreciate you watching, and we'll see you tomorrow after the reaction to the FOMC.